Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into some of the most promising AI stocks on the market today. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Nvidia, ticker NVDA, is a growth stock that has captured the imagination of investors globally. Since the start of 2023, Nvidia stock has provided a return of 746% to shareholders, significantly outperforming broader market returns. Valued at a market capitalization of $3 trillion and $30 billion US, Nvidia stock has now provided an astonishing return of 26,500% to shareholders over the past decade. Nvidia is part of the artificial intelligence megatrend, as its chips are used in data centers that power applications such as ChatGPT. The stock's impressive rise has led to it now trading at 45.4 times forward earnings, which is quite steep compared to the average S&P 500 stock, which trades at less than 28 times forward earnings. The remarkable growth of Nvidia can be attributed to its strategic positioning within the AI sector. Nvidia's GPUs, graphics processing units, have become the gold standard for AI computations, providing the necessary horsepower for training complex models and performing high-speed data analysis. These GPUs are not only used in data centers but also in a myriad of applications ranging from autonomous vehicles to high-performance gaming, making Nvidia a versatile player in the tech industry. However, the premium valuation of Nvidia stock may deter some investors. While Nvidia is leading the AI race, there are several other companies that are part of this rapidly expanding addressable market. Here are 3 such promising AI stocks that are cheaper than Nvidia. First on our list is Uipath, ticker PATH. Uipath, a company valued at $7 billion by market capitalization, provides robotic process automation solutions to enterprises, one of the fastest growing verticals in the tech industry. RPA allows companies to discover automation opportunities and build and manage software to automate these processes. Uipath's platform leverages artificial intelligence capabilities, such as natural language processing and machine learning to support advanced automation. This cutting-edge technology enables businesses to streamline their operations and reduce costs significantly. Uipath's journey in the tech landscape has been marked by innovation and rapid adoption. The company's software robots are designed to emulate human actions, thus automating repetitive tasks that would otherwise require manual effort. This not only enhances productivity, but also allows human workers to focus on more strategic and creative tasks. Moreover, Uipath's AI-driven approach means that their RPA solutions continually learn and adapt, making them increasingly efficient over time. In recent financial reports, Uipath's revenue rose by 16% year-over-year to $335 million, while net income increased by 18% to 13 cents per share. Despite this growth, Uipath stock is priced at just 32 times forward earnings, making it relatively inexpensive compared to its potential. Earnings for Uipath are forecast to rise over 50% annually between 2024 and 2028, which could lead to substantial returns for investors. Analysts remain bullish and expect the tech stock to surge over 25% in the next 12 months. This optimism is driven by Uipath's robust product offerings and its strong foothold in the automation market. But before we proceed, here's a quick question for you. How do you think Uipath's projected earnings growth could impact its stock price? Drop your thoughts in the comments below. Next up is Supermicrocomputer, ticker SMCI. Valued at $46 billion by market capitalization, Supermicrocomputer has outpaced Nvidia in recent months, surging 858% since January 2023. However, it currently trades 34% below its all-time highs, pricing the AI stock at 33 times forward earnings. Supermicrocomputer specializes in high-performance servers, which are essential for AI applications and data processing. The company's products are known for their efficiency and scalability, making them popular choices for businesses looking to enhance their AI capabilities. Supermicrocomputer has carved a niche for itself by offering customized solutions that meet the specific needs of its clients. Their servers are designed to handle the most demanding workloads, making them ideal for industries such as finance, healthcare, and technology, where real-time data processing is crucial. Furthermore, the company's focus on energy efficiency has made its products attractive to businesses looking to reduce their carbon footprint and operational costs. Wall Street expects Supermicrocomputers' adjusted earnings to grow by an impressive 62% annually between 2023 and 2028. This growth is supported by the company's expanding market share in the AI server market. Investment firm Bank of America forecasts Supermicrocomputers' share in the AI server market to increase to 17% in 2026, up from 10% in 2023. Additionally, the AI server market is expected to grow by 150% through 2026, providing a significant growth opportunity for Supermicrocomputer. This makes it a compelling investment option for those looking to capitalize on the AI boom. The strategic partnerships that Supermicrocomputer has forged with other tech giants further enhance its market position. By collaborating with leading software and hardware companies, Supermicro ensures that its servers are optimized for the latest AI applications, thereby offering superior performance and reliability. These collaborations also enable the company to stay ahead of technological advancements and incorporate cutting-edge innovations into its product offerings. Lastly, we have Taiwan Semiconductor Manufacturing Company, ticker TSM, a tech heavyweight with a market capitalization of $878 billion. TSMC is the world's largest manufacturer of semiconductor chips, and some of its biggest customers include Nvidia and Apple. TSMC's chips are integral to various AI applications, from smartphones to data centers, making the company a critical player in the AI ecosystem. TSMC's dominance in the semiconductor industry is a result of its commitment to technological excellence and innovation. The company invests heavily in research and development, ensuring that it remains at the forefront of semiconductor technology. TSMC's advanced manufacturing processes enable it to produce chips with superior performance and efficiency, which are crucial for powering AI applications. In the second quarter of 2024, TSMC reported revenue of $20.8 billion, up 33% year over year. Comparatively, adjusted earnings rose to $1.48 per share, up from $1.14 per share in the year-ago period. The company's high-performance computing business, which manufactures AI chips, accounted for 52% of sales and was the key revenue driver. TSMC's leadership in the semiconductor industry and its focus on high-performance computing have positioned it well to benefit from the AI revolution. Despite its strong performance, TSMC stock is priced at just 26 times forward earnings, making it an attractive investment option. Analysts expect the company's earnings to grow by 21.5% annually over the next 5 years. Given the average analyst price target estimates, TSM stock trades at a discount of 13% as of July 2024. This presents a potential buying opportunity for investors looking to gain exposure to the AI market through a well-established and profitable company. TSMC's extensive customer base, which includes tech behemoths like Nvidia and Apple, underscores its importance in the global technology supply chain. The company's ability to produce high-quality chips at scale has made it a preferred supplier for many leading tech companies. This strong demand for TSMC's products ensures a steady revenue stream and provides a solid foundation for future growth. To sum up, our comparison table showcases some intriguing alternatives to Nvidia in the AI investment landscape. Nvidia has undeniably shown remarkable returns and impressive revenue growth. However, Uipath, Supermicrocomputer, and Taiwan Semiconductor Manufacturing present compelling opportunities with strong revenue performances and attractive valuations. Uipath is making strides in automation with a notable 30.4% return since 2023. Supermicrocomputer has surged 858% due to its efficiency and scalability in high-performance servers. Meanwhile, Taiwan Semiconductor remains a powerhouse in semiconductor manufacturing, with consistent growth and key client relationships. These stocks are well-positioned to benefit from the AI sector's rapid expansion, providing diversified options for your investment strategy. Always remember, thorough research and consulting with a financial advisor are crucial before making any investment decisions. In conclusion, while Nvidia has been a standout performer in the AI space, other companies like Uipath, Supermicrocomputer, and Taiwan Semiconductor Manufacturing offer compelling investment opportunities at more reasonable valuations. These companies are well-positioned to capitalize on the growing demand for AI technologies and could deliver significant returns for investors in the coming years. Investing in AI stocks requires careful consideration of various factors, including market trends, company fundamentals, and potential risks. Each of the stocks mentioned in this video has its unique strengths and growth prospects, making them worthy of consideration for any investment portfolio. By diversifying across different segments of the AI market, investors can mitigate risks and enhance their potential for returns. And before you go, here's one last question. Which AI stock mentioned today do you think has the most growth potential? Let us know in the comments. Thank you for watching today's video on simple investing secrets. If you enjoyed the content and found it informative, please like the video and subscribe to our channel for more insights and updates on investment opportunities. Remember, this video is for informational purposes only and should not be considered financial advice. Always conduct your own research and consult with a financial advisor before making any investment decisions.